This is Wealth Motivation with Mark Hill. The topic of the day is buy low and sell high. Buying low and selling high is the simplest strategy in investing. It's so simple that a 5-year-old can understand it. It's so simple, but so many people find it difficult to follow. Why? Because emotions get in the way. Fear and emotions get in the way of following the simple strategy of buying low and selling high. Only about 3 to 5% of investors can keep their emotions and their fear in check and follow this strategy over the long term. That's why only about 5% of the world population is financially independent. People become too fearful and sell when asset prices are low, and they get too greedy and buy and are afraid to sell and take a profit when asset prices are high. See, if you just do the opposite of the masses, the opposite of the sheeple, you'll usually make the right decision. Warren Buffett's famous quote, "Be greedy when others are fearful, and be fearful when others are greedy." So always remember that when the assets in different markets crash, real estate market, stock market, that's not the time to be fearful just because everyone else on the news and in general population is fearful. That's the time to be brave. In 2009 stock market crash, everyone was fearful. There was blood on the streets. Everyone was scared to invest in the stock market because it was crashing. And it's nothing new under the sun. Stock markets go up and stock markets go down. It's always a good time to buy an asset, but especially when the asset is at a low price, you really want to dig in your heels, be brave, and buy that income producing asset. I remember when the housing market crashed around 2008, people were selling their homes. That's when they should have been buying homes or just holding the homes they already had. Asset prices were low. That's when people should have been buying home building stocks, home building companies, home improvement company stocks, the Home Depots, the Lowe's of the world, the lumber liquidators of the world. Because a few years later, the real estate market rebounded to all-time highs again. Real estate related stocks rebounded to all-time highs again. When the stock market crashed in 1987 and in 1999 and in 2008, eventually the stock market came back. The stock market is always going up over the long run. If you have a long-term point of view, then you shouldn't worry. If you've invested in individual stocks and you've properly done your research, you shouldn't let any temporary market turmoil make you lose confidence in the research you've done on that specific company. Due diligence and proper research should hold you steadfast in your decision in investing in that particular company. For example, I'm invested in McDonald's. For me, that's a good investment for my specific needs. It's paid a dividend. It's for many, many years, and it continues to increase its dividend. Every time I go to McDonald's, it's always busy. I've made money in the past on McDonald's stock, and I believe it will continue to make money into the future. Now, I'm not going to let any market turmoil or any temporary drop in the stock price deter me or make me scared of my investment. And that's why I like to invest in stocks that mainly pay dividends. Because no matter if the stock goes up or down in the short term, you're still going to get dividend payments. You're still going to get that check. Just like owning a rental property. Whether the value of your property goes up or down from year to year, it doesn't matter. Because your cash flow, your rent, is still coming in. The cash flow from the rent is still going up every year. The cash flow is the most important. And then over the long term, the increase in the asset price going up over time, that's icing on the cake. So it's really nothing to fear when you have a good asset. Nothing to fear in the short term. If the price of a great asset, such as a Fortune 500 stock or a great real estate in a great location, goes down in the short term temporarily, that's a great buying opportunity. It's a great buying opportunity. Especially if you have a stock, price goes lower, great time to buy more stock. Let me just give you a quick example on how illogical the masses are. And I don't want to be too hard on people because it takes time and practice, and it takes a lot of effort to get your emotions in check when it comes to money. But the example is, say Ford Motor Company. For some reason, they said all Mustangs will be half off. Half off price on all Mustangs. They're usually $40,000. Now they're $20,000. Half off for 2 months. Do you know people will run in droves? Millions of people will go out in droves to buy that Mustang half off. But if the stock, Ford stock, which is a publicly traded company, if their stock went down in half from $10 to $5, people would be scared. People wouldn't want to own that asset. Something that could profit them in the future, they'd be scared to buy the Ford stock, but they'll run out and buy the Ford Mustang car that's half off when it's a guaranteed that they will never make any money off of it. That investment will go down to zero. But the investment in the stock that could double or triple, no, they'll be scared to buy that. I don't want any of that stock. See how irrational people are with money, but it's so simple. It's just controlling your emotions and not looking for instant gratification. People will go out and spend hundreds of dollars on lottery tickets every month, every time they get paid, which is literally guaranteed to be 100% loss when you go out and buy a lottery ticket. But it's emotional, it's exciting, and people will just throw away their money. Instead of investing $100 or $200 a month in the overall stock market, which If history repeats itself, which it normally will, they could be a millionaire, retire a millionaire in 20 to 30 years. So the bottom line is, don't be fearful when asset prices are down. Think logical, don't get emotional, don't think short term, think into the future, and you'll get rich. Focus on buying the stocks of great companies and not their products. Think like a hustler, not like a customer.